Welcome to the Higher Education Student Finance discussion. My name's Martha and I'm going to go through a few slides with you today. Hopefully there is a lot of information there, but you will be able to stop and start this so that you can read it at your own leisure as well. So from a point of view of your tuition fees, you'd never see these fees when the university will receive them, and you don't have to pay them up front. You will be able to apply for a loan to cover both the tuition fees and your living costs. And they come in two separate forms, so the tuition fee loan and the maintenance loan. The tuition fee loan for MidKent, because all of our programmes are part-time, are around £3,967. For those that are eligible, you will be able to apply for the tuition fee loan. And as I said before, it gets paid straight to us as a college. As a general rule, it is available for the full length of your course, plus an extra year if you need it. And you may have to speak to student finance if you've already had a student loan as an undergraduate previously. With the maintenance loan, this is to help you with the day-to-day living costs. Again, most of the time a loan will be available, but again, the amount depends on where you live and study and your own household income. The maintenance loan is paid to you in 3 instalments per year around the start of each term. Again, as I said before, it's based on your household income on the previous full tax year. If your income has gone down by 15% or more, you can do a change in year form. Obviously, this is much more eligible this year with everything that's gone on with the pandemic. So it's definitely worthwhile looking into that and speaking to student finance. You can also calculate what you might get on the link that you'll find here on the student finance calculator on the gov.uk website. So what is included in the household income? So if you're under 25, it would be that it's your parents' income, and you would need to be dependent on them financially. If you're living with a partner and you're over 25, again, it would be your partner's income that would be taken into account. Income from any of your savings would be included, whether that's investments or property as well. And you're classed as independent, as an independent learner, if you're 25 or older, have a child, have no living parents, are married or have been married or are in a civil partnership. In some cases where you've supported yourself for 3 years or you're estranged from your parents. From a loan repayment point of view, at the end of you having graduated, the tuition fee loan and the maintenance loan are put together, but you won't start paying them back until you're earning over £26,575 per year. From a point of view of when you graduate, normally that's in June, you wouldn't actually start paying back any money at all until the following April and the new tax year. So if, as you can see from the table, if you were earning £26,575, you would pay nothing back in that year at all. If you gained a job around £30,000, you would be paying back £25.68 approximately. Now, if you consider that your take-home pay for a £30,000 year role is about £2,000, £25.68 really isn't that much money. It's less than most of us pay on our phone, mobile phone bills. And unlike most other loans, if your earnings fall below that £26,575, you stop making repayments until you begin earning over that again. So, for instance, for ladies, it could be that you take time out to have a family and to bring up your family. Obviously, that could go for gentlemen as well. It could be that you decide to take out a gap year and go travelling. And again, because you're not earning anything, you won't be paying anything back. And as you can see, it goes up incrementally, depending on what you are earning. How much will you pay in total? So we can't possibly know that at the moment. And that's because it does depend on how much you earn throughout your working life. However, any outstanding loan that you haven't repaid after 30 years will be written off by the government. And the IFS have estimated that only 17% of graduates actually pay off their full loan amount, and these will be among the highest earning graduates. So technically, you could think of it as almost some free education in there. That's the way I like to look at it anyway. So could it be a mistake to use your savings to cover the costs? This example from the money saving expert does say that. So what it's saying is that although Paul's parents paid £47,000 instead of him getting the loans, because he never earned over the £26,575, he wouldn't have had to have paid anything back anyway. So again, money saving expert, some good independent advice there, and worthwhile the look on the internet. Will the student loan go on your credit file? As you can see, no, it doesn't. It's not like any other type of loan. Again, on Money Saving Expert, Martin Lewis often says that it's more of a graduate tax because obviously it's linked to your PAYE. And actually, talking of PAYE, if you're employed, your payments are taken directly from your salary. And if you're self-employed, they're calculated as part of your self-assessment return. It won't affect you from a point of view of getting a mortgage. However, they will consider the monthly repayments when carrying out affordability checks. But if we go back to the table where you were looking at the repayments, obviously it's all in line with how much you're earning anyway. So from a point of view of some of the student finance and benefits, universal credit, you probably won't get that if you were studying full-time. However, with a part-time course, you may be able to. Again, it's worthwhile you obtaining your own advice through the benefits agency. If you have responsibility for a child or a disabled with limited capability for work, you may, again, there may be some exceptions, and for each assessment period, an amount for the student income would be taken off because you were receiving that. For child benefit and child tax, they're not affected by student finance, and maintenance from an ex-partner is not considered either. From an income support point of view, you can claim support if you have a child below the age of 5. Usually, you can't get universal credit if you're studying full-time. However, part-time study, there may be an exception. You can see from this that your universal child credit and child tax are not affected. And from an income support point of view, you may only receive income support during the summer break because the student finance should cover the rest of it throughout the year. And here's some more. So most full-time students are not eligible for housing benefit, but again, because you are part-time, that may well be the exception, and you are exempt from paying council tax. There's a discount if you're living with a non-student. You can still claim a carer's grant from student finance with regards to carer's allowance. And if you study part-time, you can claim the actual carer's allowance. With job seekers allowance, you can't claim job seekers if you're a full-time student, but again, there may be part-time you may be able to claim. So again, what we recommend is that you obtain advice from your job seekers office with regards to that. How do you apply for student finance? It's all done online. So you can go to the gov.uk website and apply online for student finance. We like you to try and complete it as soon as you can. If you apply by the end of May, you are will be insured to receive your payments for September. You do not need a confirmed place to apply. So what we would recommend is that you do apply as soon as student finance is open, which is at the end of February. And if you want to be considered for the additional financial support from your university or from the college, just ensure the box to share information is ticked, as this will generate any financial support that's available automatically. When you're applying, some of the things that you might need will be your passport details to prove your identity or a birth certificate. In that case, you will have to actually physically send that off to Student Finance England. You'll need your household income information. You'll need the university and course details, obviously our college details, and you'll need your bank details as well. You may need other documents if you are continuing to apply for some of the benefits that we talked about a little bit earlier. So thanks for listening. If you do have any questions, please contact me on the email below and hopefully I'll be able to answer them. Good luck in your application. We hope to see you at MidKent soon. Thank you.